Watch Your Glitches, and as promised, here is a video to review version 1.1 of the Programmable Banking, Programmable Money, Ripple and XRP Ledger conceptual architecture, where I try and describe the actors and ancillary systems involved in essentially the use of AMMs for real-world tokenization. That's the kind of use case I'm working on. So firstly, before I jump into this, just a huge thank you to everyone who liked and shared my tweet, which showed version 1.0 of this diagram, which I've slightly improved based on the feedback provided. Absolutely blown away by the support. Thanks everyone. There seems to be huge interest in this area, and I'm glad you're finding it useful. It fascinates me, and I'm actually working on trying to put together a business proposition around this that we can potentially take to investors. But in the meantime, this is all research at the moment, so I'm going to do what I did in the last video, but hopefully do it slightly better. And let's start with Ripple and its customers. So Ripple is essentially enterprise software service provider specializing in enterprise software for payments, and it has a couple of products. So Liquidity Hub, last time I didn't really know what this was, I do now. Let's just give Ripple's own explanation of what Liquidity Hub is. Ripple Liquidity Hub is a turnkey platform that provides businesses with a streamlined way to buy, sell and hold digital assets. Businesses can access multiple liquidity pools and advanced trading features, including post-trade settlement, all through a single API experience. So buy, hold and sell crypto probably includes Metaco in there now as part of that proposition. So custody of crypto, institutional custody of crypto, probably implemented by Metaco, their recent acquisition. And Metaco again in the news with IBM in terms of improving the key management for their custody. So they are licensed custodians, is my understanding. Unlike other players in this field who are technology service providers but not custodians, namely Fireblocks, which is another company that I really like, by the way, but we'll get onto them in a moment. So that's what Liquidity Hub does for enterprises, basically a single API that you can use to purchase certain crypto assets. And in the diagram here, they've got Bitcoin Cash, Bitcoin, Litecoin, and Ethereum in Liquidity Hub. Controversially, XRP was missing, but we think that was simply because of the ongoing case with the SEC, which is about to be completely finished off, but certainly puts XRP in the clear, and it's just the Ripple's institutional sales of XRP that are still outstanding judgment. I think at some point in April, all of this comes to some kind of ruling. But yeah, so that's what Liquidity Hub is. The other major piece of software that Ripple sell is Ripple Pay, also known as ODL. It was in the past. So let's describe the steps of Ripple Pay. There's a little diagram here with the sender and the receiver. And let's go over exactly what's happening in this diagram as per Ripple's own explanation of it, I believe. So the sender requests a quote on pricing FX because I want to send dollars to... I'm in the UK and I want to pay a customer in the US in dollars using my sterling. So the sender requests a quote for pricing the FX. Give me a price, please, Ripple, for GBP USD. Ripple's technology calculates the pricing of the FX across all parties and returns a quote to the sender. So who are all of the parties? Well, actually, it could be all of these entities here. It could be centralized exchanges. It could be decentralized exchanges for FX. I don't know if that actually exists. Could be Fireblocks. Could be wallets. Could be AMMs. Actually, for the FX piece, fiat FX is probably going to be FX providers and OTC, maybe brokers, any like those kinds of entities. This side here is actually for digital assets, but we'll come to that. So the technology will go across all of these parties to try and find the best price and present that price to the sender. The sender accepts the quote and submits payment instructions initiating the payment. The send side exchange debits sender's account and converts the amount less fees into XRP. So I've basically put sterling in, and the send side exchange is going to take its fees and convert it into XRP. The XRP is sent across the ledger, which settles in less than 3 seconds, from the send side exchange to the receive side. So the exchange that was used on the send side is an exchange based in the UK because I'm using GBP. The XRP is sent on the ledger to an exchange in the US, and on the receiver side, the receiver side exchange converts the XRP into local currency, USD in this instance, and credits the sender's account less fees. So both the sender and the send side and receive side exchanges will charge fees. Ripple's technology confirms the amount received is accurate and will top up the sender's account if needed. The receive side exchange forwards the payment to the receiver. The receiver forwards the payment if necessary. The sender and receiver confirm the transaction is complete. Now, I think this model has slightly changed because, or it's been augmented with Ripple providing liquidity itself rather than depending on an exchange. So what can happen is that if the necessary liquidity isn't available on an exchange, the necessary XRP isn't available, then Ripple will provide either, I think it's leasing or lending XRP to the sender for the purposes of settling the transaction. And I think controversially, is that Mr. Huber is working on a thesis that attempts to implicate price movements of XRP related to the 200 million or so dollars of ODL transactions that occur, where I think the thesis is that $200 million of XRP that Ripple sells back into the market will affect the XRP price, and essentially Ripple buys it and then sells it back, so it causes a spike in the price of XRP, which is over the next few weeks kind of levels out again as Ripple sells the XRP back. I think the problem with that thesis, Mr. Huber, is that these purchases and sales are not, the vast majority of them, as I understand it, are not on open order books. They're over the counter directly with market makers. So they cannot affect the price of the price discovery as per order books on an exchange. So I think that's the critique. I hope I articulated that properly. I hope I didn't make too many mistakes on that. But the idea, I think, that Ripple's purchases and sales of XRP related to ODL shift the price of XRP, maybe a little bit, but not much, out of the $200 million. So there's, in terms of total volume, we're talking of XRP, we're talking about 1.5 billion. You can split that up into buy and sell. So let's call it 750 million a day of XRP on a good day, let's say. Now, if you assume the full 200 million of XRP that Ripple is going to buy for ODL purposes, it buys it straight off the market in one day, then yeah, I guess it could push that price. But the problem is, a couple of problems with that. One, it's not the full 200 million. Most of that will not be purchased on order books through exchanges. As I said, it will be probably directly from the market makers via some kind of OTC arrangement. So it won't appear it won't have an impact on price. And even if they were to do that, you could say they've got an incentive to move the price up so that they can sell it back in. But why would they do that? That could be pretty risky for their business if they're discovered to be manipulating the price. So they would just sell it in smaller chunks so it doesn't move the price. So I think, I would love to hear your feedback on that, Mr. Huber. So that's Ripple Pay, which is used for cross-border payments. And then both of these use something called Prisma. So what is Prisma? Prisma will automatically split and route orders across any market participant that exposes an API. Prisma provides best execution while minimizing market impact, presenting and presents a single API to its customers. I think I need to fix that. Presenting a single API to its customers. Let me just make a quick change to this while I'm here. I'm working out loud, guys. This is one take. I'm not an influencer or a YouTuber, really. I'm just working out loud. Presenting a single API to its customers. Prisma's addressable market participant venues include centralized exchanges, decentralized exchanges, over-the-counter markets, brokers, wallets, custodians, trustees, and AMMs through the XRPL decentralized exchange. So Prisma, in both of these cases, Liquidity Hub and Ripple Pay, Prisma will scuttle off and try and find the best price and route orders in the most efficient manner, sourcing liquidity from all of these different kinds of venues. And mention Fireblocks as well. Fireblocks is a technology provider for custodial services, but it's not a custodian itself. It kind of has a gateway, provides a gateway to multiple chains and provides efficiencies in terms of swapping assets within its own internal marketplaces. Pretty clever stuff that they do there. So Prisma tries its best to find the best route, the most efficient way to settle a transaction for both Liquidity Hub, just remember buy, hold and sell crypto, and Ripple Pay for cross-border remittances. Cross-border payments, sorry. And what does Prisma do as well? It will also goes into the actual XRP ledger, uses the XRP ledger itself to source liquidity. And let's have a look at the XRPL. So there are really three components to for, I think, the key components, which is a payment execution engine for the XRPL, the payment execution engine, decentralized exchange with its central limit order book, and then what's arriving hopefully in the next few months will be the AMM liquidity pools, the automated market maker liquidity pools. So we categorize all of these elements in the rest of the world as a secondary market, because Prisma can source liquidity from these secondary markets. The secondary markets because the asset isn't issued directly onto those markets, XRP being the asset. Here, though, the XRPL acts as a primary market for liquidity. The reason for that is that the AMM's ability to natively issue assets directly via the liquidity pool tokens makes the XRPL a primary market for liquidity, as opposed to AMMs implemented as dApps running on top of a blockchain. So as David Short said, global pools of liquidity that anyone can contribute and draw from is the value proposition for XRP. And by the way, the value proposition may change over time. I think as someone who's worked in startups most of my life, frankly, both in the dot-com era and then in the last 7 years that I've been involved in building and setting up 5 or 6 different startups. I can't remember how many now. But if you cannot adapt and evolve your proposition, your value proposition, then you'll die. And Ripple as a company has been around for about 10 years now. And I know initially there was a lot of focus on this cross-border payments. And I think that's pretty much been solved, right, to a large extent. The infrastructure is available, and now that the case with the SEC is about to be lifted, we can expect more and more use of Ripple's Ripple Pay solving cross-border payments. But related to cross-border payments, to solve it on scale, is the need for bringing public pools of liquidity into play. So it's weird that some people criticize Ripple for perhaps changing their value proposition for XRP. I don't think it has substantially been changed. I think it's been refined, and as it matures, the focus around the edges changes. So weird to critique a startup or any company for actually changing its value proposition, as long as it's successful, which I think in this case it is. So if we look at the payment execution engine, what I said in my previous video, and I stick to this, is that I like the symmetry in what Prisma is doing with what the payment execution engine is doing, because through features like rippling, auto bridging, pathfinding, the payment execution engine is doing what Prisma does at the application layer with APIs provided by all of these entities. The payment execution engine does that internally within the XRP ledger. So it is looking for sources of liquidity from AMMs and the DEX, order book, the CLOB here, in order to find the most efficient way of carrying out a swap or an exchange. And if that doesn't exist, finding a path to be able to swap multiple assets transparently to achieve the objective of the original swap. So for example, auto bridging, if I'm trying to exchange GBP for some exotic currency that isn't available in GPP, let's say, I don't know, GPP to XYZ, then auto bridging will look for other pairs that exist for XYZ, and then try and link them together to a GPP pair and automatically settle all of those exchanges so that I can swap my GBP into XYZ. In the diagram, I have also kind of taken the time to describe all of the key architectural components of the XRPL, which I will share this diagram. I'll make it it's publicly available, but I'll share a better copy of it as well. So I think this is where it starts getting a little bit, that's just setting the table around what Ripple and XRPL, the XRP ledger, provide. And I want to dive into the AMMs because this is where it gets a bit more interesting. So these are liquidity pools that can be essentially created by anyone with any pair of assets. And I think what makes them unique is they're designed to harvest volatility. And they do this by auctioning off arbitrage trading slots. So within most AMM implementations, if there's a big disparity between the pair of assets that are available in the liquidity pool, then the price reflects that. And it's a signal to arbitrageurs to come in and balance the liquidity pool. And they're paid for doing that. They get it's a winner takes all game. Arbitrageurs compete to be the fastest to kind of identify an imbalance in an AMM, and then to rebalance that using another source of liquidity whereby they can pocket the difference. It's a winner takes all game. So that makes it very expensive for arbitrageurs to enter the market. You can't do this as an individual, for example. You'll need to invest heavily in automation and down to the point of placing your servers that get price feeds geographically very near or inside data centers that provide those prices. So it's not a game that ordinary people can play, or even companies. It's like very specialized, and the prizes are worth pursuing for these organizations that can put together the capital to actually participate. I think what's unique about the AMMs here is that by auctioning the right to arbitrage the difference in the AMM, it's a fairer way of distributing the rewards, between the arbitrageurs and the liquidity pool providers, because the liquidity pool provider doesn't get any benefit in most AMMs when the AMM is out of balance. All of the difference in the price imbalance goes to the arbitrager. This has been now changed, where by auctioning off the right to participate in arbitration, the liquidity pool providers are actually generating a revenue. And that's one of the revenue streams. The other revenue stream the AMM provides to liquidity pool providers is market maker spreads. And then, the volatility harvesting itself. So 3 sources of revenue. Although I think I need to dig into a little bit more into this. I think the market maker spreads and the arbitrage fees I totally get. The volatility harvesting, I think, is slightly different. It may be an expression of these two. I need to really understand what that looks like, so that I'll try and dig into that. But essentially, you're massively incentivized to provide liquidity to these pools now. And who are the kinds of individuals or entities that could provide liquidity? Well, I think banks could provide liquidity, fintechs, sovereign wealth funds, state pension funds, existing market makers. If you're already a market maker, then why not provide or create an AMM on the XRPL? Given that you're now incentivized a little bit more, because you're going to get revenue from harvesting the volatility associated with that AMM. Wealth management, hedge funds, institutional DeFi, retail DeFi, investment funds, all of these entities who are seeking income growth, seeking yield, now have an incentive to create AMMs on the XRPL. And there's another entity, which is potentially central banks, because we know that Ripple is conducting currently 6 pilots, and Palau has successfully completed its pilot, I believe, with Ripple. So central banks could participate in these AMMs. Now, I don't know how that looks like, and I don't know what these pilots look like. I'm really keen to learn more about this. And we have, I think, Khalid here, who responded to my tweet. Thanks, Khalid, for your support on this one. And you're right, there is a lot missing around. So Khalid said there's a few pieces of puzzle missing and some connections that are still to be made, for sure. Like, we're version 1.1. And let me know what they are. Like, be explicit, please. Also, a lot of detail missing in regards to the role of central banks. 100% agree. And it's difficult to find more information on precisely how these central banks are using private versions of the XRPL, probably with the EVM sidechain, like proprietary solutions based on the open source solution that's available to everyone else. Central banks are not going to anytime soon use public ledgers, right? They want to have full control over the assets that they issue, and probably some degree of anonymity or privacy around the transactions that they engage in. So if anyone knows or can reveal any information around how these CBDCs pilots are structured, what Ripple products are being used. So far we've inferred that they're going to be proprietary forms of the XRPL with an EVM sidechain capability, but I'd love to learn more about that. So they would be another entity that could potentially create AMMs and benefit from these free revenue streams that we have here. The other area, so the CBDC thing could be considered as programmable money, but really any smart contract enabled digital asset is arguably programmable. And with hooks, you can argue to some extent that XRP is becoming programmable money. What really interests me now with the creation of these AMMs is digital capital formation. So things like that exist today, like crowdfunding, equity financing, debt financing, grants, loan notes, assets. We know, and we have been able to issue assets on the XRPL since its inception, essentially. But if you couple the asset issuance with the AMM, I think you have an interesting proposition for digital capital formation. So, just thinking out loud, how would this work? I've got a project that I want to fund in XRP. So, I want to open it up to the community, as in this instance, to fund my project. What I would do is create kind of an escrow that says when I reach my target of 500,000 XRP, let's say, then I essentially can unlock the escrow and use the funds to build the business, which I've convinced you is going to be profitable, and that's why you're investing in it. Now, what I was thinking is, what if the first thing that would happen is that you actually create an AMM with XRP on one side and the asset that you've issued on the other side. And while you're building your company, your proposition, this thing is sitting here accruing revenue by providing liquidity to the broader ecosystem. Now, your token is going to be pretty exotic and somewhat rare, at least initially, right? But it's still going to be, you're going to have a little community of people who still want to be able to trade that asset, for example, and maybe you're trading it yourself. So let's step back and have a think about what this could look like. The example that I use is tokenizing real estate. So I've got, I don't know, 20 flats in Abu Dhabi, and I create a token called, I don't know, Abu Dhabi real estate token. And I say to people that if you can invest 1 million XRP in my real estate, then I'll issue this token. I hit that target, so I tokenize my 20 flats for 1 million XRP. The escrow unlocks, and through some magic, we create an AMM with XRP on one side, which has been provided by the investors, and the token, the Abu Dhabi real estate token, on the other side. So now this just sits there generating revenue from these three streams, and also the participants can withdraw. They get liquidity pool tokens. So remember, we get the LP tokens, which are an asset class in their own right, which we can then use for further investments. So everyone that helped me raise capital for this business gets their liquidity pool tokens, and their capital, they can, it's not just locked up in my company waiting for something to happen. They can take these liquidity pool tokens and do something useful with them. God knows what that is at this stage. Get a loan, use it as collateral, invest it, use your imagination. But it means your capital isn't just locked up in my business waiting for me to sell more property in Abu Dhabi. Just thinking out loud, this is what it could look like. And take that example and look at all other real world assets. So we have real estate that we just described. What about art? What about infrastructure? Telephone lines, pipes, that kind of stuff. Roads, bridges, railroads, securities, Gary, gaming. And I've missed one out here, which is energy. Which I should add as well. I think energy could be tokenized, and given what we just heard with SBI's engagement with Aramco, that was huge. I think people have maybe missed the importance of that. But SBI, being a large shareholder in Ripple, engaging with Aramco to develop digital assets, among other things. Actually, where was this? By the way, if you're on Facebook, do join us at CryptoGB. This is where I do most of my postings on things. But let me see if I can find that post on SBI. Oh yeah, it's a bit annoying. Let's have a look at newest posts, because I'm sure I posted it up on here. I can't find it though. It doesn't matter. No, I'll try and find it and put a link. But yeah, energy I think is one of those other assets that could be tokenized in this manner. And why not put energy in and the associated token in an AMM? I'm just struggling to think what are the reasons why you wouldn't use the AMM on the XRPL, given that it's incredibly fast for settlement. It's already got a massive network of financial institutions and banks that um, would want to source that liquidity, and also will provide payout rails in as many countries as it supports today, and a growing number of them. So I think this is a business that's well worth looking into. The automated creations of AMM for digital capital formation. And then when it gets really exciting is when you bring programmable banking into this. So I can speak freely about PaveBank now because they are live. But PaveBank are the world's first fully programmable bank based in Georgia today. And there are lots of use cases for programmable banking. I put them into two categories. There's kind of the cost center use cases, and there's the revenue cost center efficiency use cases for programmable banking, and then there's the revenue generating use cases. Here I've captured some of the cost saving use cases because for treasury liquidity, banking relationships, payroll, disbursements, collections, all of these back office operations that are today highly manual, fragmented across different countries and different time zones, which makes them costly, insecure, and time consuming. A lot of this can be automated by programmable banking. So your bank account can have a Pave app, let's say, available from a Pave store, applied to it, written by specialists who know what they're doing, who have tested the application. They can configure it for you to automate away some back office functionality that's costing you a lot of money and keeping you awake because of the number of people that are involved in that operation, which frequently probably fails and is prone to being compromised by bad actors. So those are the cost center efficiency use cases. What I'm going to add to this diagram next is all of the revenue generating use cases for programmable banking. And that's where I get really excited because programmable banking, in conjunction with this asset issuance and digital capital formation on the XRPL, all fully automated with respect to taxation, reporting, compliance. It could be a flywheel sounds like a too primitive a term to use for the. It could be a flux capacitor for growth, rather than a flywheel. It could be. I think that if you can stitch all of these up and automate it properly, serving real use cases, you'll have a flux capacitor for generating revenue. Note about some of the things that I also want to start adding to this because I think the other big area for me is what Flare networks are doing. So I'm going to extend this diagram, figure out how to do it properly, where I can include F assets. And F assets on the Flare network essentially unlock the liquidity of non-smart contract-based digital assets that exist today. Things like Bitcoin, Doge, and XRP that aren't smart contract-based. XRP is slightly becoming smart contract-based, so we've got to be a little bit careful. But today it isn't. F assets allow you to unlock the liquidity of those assets and allow them to participate into DeFi. And I think they need to be on this diagram because I don't see him as being competing with the AMM. And the reason for that is because Flare is also bringing data onto the network and bridging with other networks. So I see what Flare Networks is doing is highly complementary to the enhancements that are happening to the XRPL. And I really want to explore that piece. So I guess version 2 or 1.2 of this diagram will have 3 new things in it, which I'll be working towards, maybe point releases of each one. Firstly, the revenue generating use cases for programmable banking. I'm going to add that. I'm going to elaborate, if I can, how central banks interact with the XRPL with their own private versions of Ripple software based on the XRPL, but proprietary. I'd love to get that in there. If anyone can help, please let me know. And then I'm going to put a huge section on this side over here, probably on the right, with Flare Networks, F Assets, and Layer Cake, bridging to other networks. And just as I find the innovation in the AMM, the XRPL AMM as, I think, a complete game changer, it's very different to other AMM implementations, more equitable, and in terms of the reward ratio, and providing greater incentive to participants to provide liquidity. I think what Flare are doing with bridging networks is equally as innovative, because they're effectively fully decentralized way of bridging across networks, and also offering kind of insurance capability. So if the bridge is compromised, which is I would say it's going to be quite unlikely, because Flare Networks have engaged auditors at the inception of the creation of the project, not at the end, which is again a complete paradigm shift for. I think the right way of writing code is to do security at near the beginning, as near the beginning as possible. You can't do it right at the beginning sometimes, but at least get auditors involved in your code at the beginning of the project, which is what they've done. And they also have this ability to ensure the bridge. So the poor bridge users are not the ones picking up the bill if the bridge has been compromised, but actually the people operating the bridge have to put up collateral, which makes it so much, again, bringing something from traditional finance into DeFi, implementing it in a trustless, decentralized manner. Again, I think that's absolutely game changing, and I want to include that in this diagram next. So look out for those. Again, thank you everyone for chipping in with your contributions, and shout out to Cash, the Mickey B Fresh, people at Ripple who have been speaking to me, David Schwartz, that'd be brilliant, Espo, Paul, Vet, Dark Horse, XRP Productions as well. I'll add other contributors here as well. Thank you for your input. It's really valuable. Spaces are really valuable. So Vet, another shout out to you for getting XRPL, RippleX, and other engineers into these spaces, explaining what they're doing. It really helps me understand what's going on. And hopefully, like, this is not by no means a perfect diagram, as people have mentioned. It's missing some links, it's missing quite a lot of information, but hopefully it's getting better with every iteration. And yeah, my hope is at the end of this, we open up a whole bunch of opportunities for businesses, so we can begin to build out ecosystems here and potentially form the capital using these tools themselves, rather than more traditional means of going to like getting funding from a venture capital. Let's use the ecosystems tools that we already have to create the flux capacitor of revenue generation and capital formation. Thanks everyone, and later glitches.